Great to see Abdul and Nicola. Hey, thanks for showing up, guys. That's awesome. Um, I think we're ready to roll. Adinda, should we run? Run with it? Yes, thank you. Okay, great. Thanks, guys. Thanks, Samir. Well, my name is Walter Peters, and I know many of you actually from interactions we've had. And I wrote a book called Naked Forex. If you like the kind of stuff you're going to hear about tonight, a lot of it, what we're going to talk about, is psychological, but we will jump into some of the charts as well. Then the book may be interesting to you. I don't really care either way, if you buy it or not. If you're interested in this kind of price action trading, I think I make like 50 cents per book. So you certainly you don't make money, you don't make as much money writing books as you do trading, that's for sure. But the only reason I mention is it's a great resource for this sort of stuff. If I say things like whammies or trendy kangaroo tails, and you're like, what the? Well, then the book's a good place to go. Okay, and you can find it at most stores that sell trading books. All right, now that that's out of the way, what we're going to talk about tonight, I say tonight because here in Sydney it's 8 o'clock in the evening. We're going to talk about men versus women. Now, this is something that for me is really near and dear to my heart. Again, thank you so much for spending time here, guys. And for those of you watching the recording, welcome as well. I'm sorry that you weren't able to make it live, but I understand. I know most of those in the U.S. will be sleeping now. And if they're not, go to sleep. You shouldn't be up trading this late. So the reason why I'm so interested in this topic of male and female is partially because I'm a psychologist. And in psychology, in cognitive psychology and social psychology, because psychology is such a new field, a lot of what we focus on is what's obvious, differences. It's interesting to me that some of the psychologists who are kind of on the fringe focused on the opposite, which is more on how are we similar. And I think that's gaining some steam in recent decades, but most of the research we have in psychology is about why this group is different from that group. And that's sort of a natural way that we approach things, which I think is interesting in and of itself. But it doesn't change the fact that most of the data that we have focuses on differences. Now, I've got three things that I'm going to highlight. And then at the end, if you're interested in having a look at the charts, I'm happy to give you my perspective as a naked trader who is soon going on holiday. So I'm only going to be taking weekly chart trades while I'm on holiday because I don't want to babysit my trades when I'm out surfing in the Indian Ocean. That's the last thing that I want to worry about is a 4-hour trade. So what I'm going to do is and another thing that I should mention is I know more than a few female traders who absolutely kill it. In fact, one of them is here tonight. Nicola is just brilliant trader. And thank you, Nicola, for spending time with us. I think I saw in the chat window that Nicole has also been on holiday, but so it's not rare to meet a female trader who is really, really good. And I think there are particular reasons why. My mother-in-law also happens to be a trader, and she is also very, very good. And so it got me thinking about this, and I kind of dove into the research and sort of what's going on here. And I have some theories. So what I'm going to offer you tonight is partially based on psychological research and partially based on just my own gut. So that's what we're going to talk about. So females versus males. The first thing that I notice when you're talking about female traders is how they the importance of being correct. And this kind of is related to the research when people look at conversations in psychology. So it's not really linguists, it's more cognitive psychologists who look at language patterns. And what we've noticed is that typically, if you're in a situation where there's men and women speaking, the men will often overrun and interrupt the females in the area. Of course, there's exceptions for every rule. I'm sure everyone here can relate to, Aunt Mabel, who sort of talks over everyone else. But in general, what will typically happen is you'll have a situation where your males in the area are more likely to talk over the females. Now, And actually, what I've noticed is that you will notice that females are really sly and practiced in the way that they will bring someone around to their point of view, whereas a man is much more likely, and again, we're talking generalities, but a man is much more likely to say, no, you're wrong, and this is why. What females will often do is you'll hear them say things like, oh, I didn't know it was like that. So what do you think about this? And what they do is they slowly bring you around and they kind of almost not play dumb, but they almost kind of let you come to the conclusion. It's a very typical thing to hear in a conversation with women, and I think it's just brilliant because it's almost like this soft sort of conversion to the other side, and it's really cool. But this brings up point number one that I want to talk about tonight, and that is in why this is so important into trading is because this is the idea of, and I'll put all these up here for you, all three of them. I was wrong. And this is something that I believe you will notice female traders are much more likely to embrace this than men. And if you have any interest in reading the Market Wizards books, almost every market wizard has at least one story of where they were so convinced that their position was correct that they did things like they kept moving their stop to give it more, quote, breathing room, that they added more to the position because, they were using dollar cost averaging or whatever, whatever their, which by the way was a dollar cost averaging was created in the East by the brokers as a reason for suckers to bet, to put more trades up. Basically, it's not anything other than that. But so men typically are much more likely to hold dear their position and what they believe to be true. Can you hear me okay, guys? Does this sound all right? Does this sound okay? Yeah? Okay. Okay, sorry, I just had some questions here about the sound. So what you'll typically notice is women traders are able to admit that I was wrong. And now this is how it may manifest. It may manifest, for example, in a reversal. So let's say that we're looking at this chart here, which happens to be the Aussie Singapore Weekly. And let's say that you're, I don't know, you're deciding to, let's say that you want to go, let's see. Let's say that you wanted to go long here, okay? Right there. So the reason why you want to go long is you see it's on support. There's a support level right here, and the market's going to go up now. So let's go long. This is really great, blah, blah, blah. It's not quite what I would call a bullish big shadow, but it's almost an engulfing, and it looks pretty bullish, and it's on a place where the market's bounced. So why not just go? Okay, I'll try and stick close to the mic if the volume's a little bit off. Apologies for that. So what's happening here is I decide, okay, I'm going to go long, right? So I hit the F12 key on my keyboard to make sure that I can advance one candle at a time. And although the market initially went higher, it's come back down to support. And now it's broken through and basically stopped me out because my stop was down here. Or if it was below this swing low, my stop was down there. Either way, I've decided, I was wrong. And so maybe now I want to short it. Oh, yeah, it's definitely down here. So I'm going to start selling, right? So the female trader is more likely to be able to make it all the way down to the next support level and make money out of what was a loss, right? Whereas men are much more likely to hold, and I've been just as guilty of this as most other traders, which is, this, especially early on, the chart, the MACD is showing me the market has to go up. Why would I want to sell? So women are much more fluid and much more flexible in their thinking in general, and so they don't have a problem saying I was wrong. And if they're wrong, what does that mean? Well, it means I can, one, cut my losses maybe early instead of waiting for the market to stop me out, and two, I can probably reverse here and go the other direction. If you've ever seen a female trader who's traded for a long time one of the hallmarks of the way they trade is they'll often be happy to reverse position. And that you will not see men do that. In fact, I can talk about myself here. Oftentimes, if I think the market's going to go in one direction, I will trade it in that direction. And if it looks like it's going the other direction, I just won't trade it. Whereas women might be more likely, more flexible to actually go both ways, reverse and stuff. So that's a really important thing to note here, is that women are okay with being wrong. And again, we're talking generalities here. This is really important in trading because a couple of the good things about this are, one, you can cut your position early and take a smaller loss rather than the full loss. Two, you might reverse position, so what ends up being a loser now turns into a winner, and maybe you make up that loss and then some and actually move into profit overall. And three, it's just more having more flexibility to interpret the charts rather than saying, well, the market has to do this because I say so. If anyone's, I know we've got members here from the private forum, and you know that my bias on the Aussie dollar has been to sell it, right? I've been, so that what that means is I haven't really been there isn't really any opportunity for me to buy the Aussie dollar because I've been so keen on selling it. So maybe I've missed some opportunities because I believe the trend is down. And maybe if I were a female trader, maybe I wouldn't be so stuck in my ways. But this is one thing that we'll notice, and it can be very dangerous because you might not be paying attention to what the market's actually telling you, and the market's saying, oh, it's time to turn around here, or oh, the market's going to go the other way. You're wrong, and what you were thinking before is now should be changed. You should be more open to more information. So being open to more information is the antidote to this. So allowing yourself to say, okay, I think X is going to happen, but, and this is actually a really good formula for getting around this, is what you do is you give yourself an if-then statement. So if the market stays above 71, let's say on the Aussie dollar, I'll shift over to that chart. Let's just use this chart as an example because I mentioned it. So if the Aussie dollar stays above, let's call it 70.38, then the Aussie dollar is bullish or directionless. But if it closes down below 70.38, then it's bearish. So I'm giving myself an out. I think it's going to come down here, and I think it's going to close below 70.38. But if it doesn't over the next 48 hours, then I would say it's range bound or possibly even going up for a retracement, going bullish. So that's one way to get around this, is to allow yourself the opportunity to change based on data. So it's always data driven. You're always saying, look, if this data comes in, I'm going to change my mind. But the important thing here is that you are open to something different. Okay? So that's really cool, guys. That's a really cool way to open yourself up to more market information. All right, let's move into number 2. I'll go back to the Aussie Singapore simply because that's where I started my list. Not because I have any. I will show you a trade that one of our members pointed out on the Aussie Singapore weekly chart. Our potential trades. The number 2 thing that comes up when we're talking about men and women traders is women are more likely to say that's too risky. If you've read the Market Wizards book that I talked about before, we actually know going back into childhood that little boys are much more likely to be high on what the sociobiologists call the go system. The go system is just simply someone who wants to go, go, go. So someone who takes risky behavior, jumps, like where I live, there's a little wall off the beach. So there's a footpath up at the top of the wall. And then if you jump off the footpath, you can jump down into the sand. And then what you'll notice is that, and it's not that far, but it's far enough to be a little bit scared. I mean, it's a 5-foot drop, or it depends on where, but it's a big drop, right? And what you'll notice is little boys are more than happy to jump off the wall and do flips and land on the sand from the footpath, but you don't see little girls doing it ever. And what you'll notice is typically little boys are higher on the go system. They're more sensation seeking. They like to look for things that give them new sensations. Whereas little girls are more likely to say, no, I don't want to do that. They're a little bit more reticent, right? So that's something that, am I keeping the mic close enough? Is it good enough for you guys? Sorry, is the mic good? Yeah? Okay, I'm holding really close. I'm holding really close to the mic. Okay, so that's one of the things that we want to keep in mind here is that women are more likely to say that's too risky. Now, where does this come in with trading? If you've read the Market Wizards books, then you remember Stanley Druckenmiller. Who here has read the Market Wizards books by Jack Schwager? The Market Wizards and the New Market Wizards. Those are the ones I'm talking about, the original two books. Sound keeps weakening. Okay, sorry guys. I'm holding as close as I can. I've got my lips. I'm eating the mic. So hopefully that's. Who has read the Market Wizards books? Yes, put Y if you have. If you have, I'd like to ask you a question. Okay, Samir, great. Awesome. If you have, I'd like to ask you a question. Do you remember a quote by Stanley Druckenmiller? Stanley Druckenmiller worked under George Soros, and what he said was, I learned something from George Soros. Does anyone remember what Stanley Druckenmiller said? It was a quote that he said, this is what I learned from George Soros, as when he basically was running one of George's funds. Yeah. Samir's basically nailed it. Go big when you're sure. He said, and I quote, that he learned from George Soros, it takes courage to be a pig. It takes courage to be a pig, which is basically what you're talking about, Samir. Now, that kind of thinking, although it can work if you're right when you're a pig, they always say the old adage in the stock market is bulls and bears survive, but the pigs get slaughtered. Well, that's what they're referring to. They're referring to people who take on too big of a position. Women are much less likely to have the courage to be a pig because, in general, they're lower on the go system, as the sociobiologist would say. And what that means is they're less likely to go full bore and take all this risk because it's a sure shot position, right? That's the difference. Now, we as men have to look out for this. This is something to be aware of. Why would we ever break our rules? If our rules state I can only risk 2% per trade with this trading system, and I can only have 6% at risk at any given time, or 3 trades roughly, then why would I go ahead and take 10% on one trade? Because it looks so good, right? I've actually had this argument with traders before where, we were talking about different money management systems, and they were dead sure that the best money management system they could come up with was that if you were really sure about a trade, you take more risk, and if you're not so sure, you take less. And that's not really the way to approach it, especially when you're new to trading. You'll actually find that when you're new to trading, your instincts are actually polar opposite. So in most cases, if you're a new trader and you're just starting to break even or just starting to make profit, the trades that you really, really like are probably not going to be the best ones. It's more likely the ones that you don't like so much. And the ones that you really, really like might end up being the losers. So just important to note here that as men, we should watch out for this, that we're more likely to run into problems with taking too much risk and bending our risk management rules. And I'll tell you what that will do. I'm going to give you a formula here, and I'm going to type it up on the screen. And I wasn't interested actually in talking about this tonight, but it's so important and it ties into number 2, so I'm going to give it to you. Here it is. So you need 2 numbers here. You need the largest losing trade, and then this one, I'm just going to put it like this. I'll make it black. Sorry, I've done this wrong. It's the no, that's right. I've done it right. 1 second. And then so this is a division, right? And sum of all your winners. This is a really important number. If you can calculate this number, it's going to give you a really good idea of how you're going to do as a trader. The sum of all your winners divided by your largest losing trade. And this number, what I call the trader ratio, it should be above 6, okay, at a minimum. Now, what if this number is low? What if it's 4, for example? What would that tell you? Well, it tells you that if you add up all your winners, right, and you divide it by your largest loser, then you get 4. What that means is your largest loser has cut into a big chunk of your profits, right? A huge chunk of your profits, right? If you had $1,600 up here, right? Let's say you made $1,600 or 1,600 euros, and then down here you've got 400 euros, right? 1,600 euros up here and 400 euros down here. What that means is 1,600 divided by 400 is 4, right? That means that you had a loser that accounted for 25% of your winnings. That's terrible, right? That should never be the case. So that's what that number will tell you. And if you're doing something like being a pig and occasionally being wrong, then that's going to drive this number down. You want it to be well above 6, right? So this is why this is so important, and why being too risky and taking too much risk on as a male trader is a bad idea. Okay? All right. Exactly. You got it. Can has nailed it. 25% of your winnings all in one losing trade, which is a bad thing. Okay. So let's move on to the third and final one. Now, I want to point out something, because I know that we've been really hard on the men here, right? What I want to point out is that there's actually some other things here going on, and this isn't as clear-cut as the other two that we talked about. What I want to talk about here is some data, and what we know is women are more likely to be in information gathering mode and miss the big picture. Now, it's not really saying that this is a positive or negative. It's just a difference. So what they found was that women focus on details. This is psychological research. Women are much more likely to focus on the details, and men focus on the big picture. Okay, so what happens is women might miss out on what the overall impact of a big piece of a big variable is, a big picture idea, and they're sensitive to small little things like losses that are coming up in terms of trading, and it makes them more difficult for them to identify something that, like a general principle. Okay, now this doesn't mean that men are better. It just means that if it's a big picture thing that's going to make the difference, right, the men might pick up on it. But if it's a more detail-oriented thing, women are more likely to pick up on it. So it's just something to be aware of, okay? It means what's the name of the formula, says Elliot Bennett. The formula here is called the trader ratio, okay? And all my students know about this, but it's called the trader ratio. And you want to be above 6, okay? Trader ratio, that's what that is. Trader ratio, you want to be above 6. Sum of all your winners divided by the largest losing trade. If you don't have live data, you can certainly do your back testing data. Throw that in there for, like, if you're running through Forex Tester or something. All right, so that's that. No worries, Elliot. No worries. That's a trader ratio. Okay, so basically, this idea that women are more likely to gather information, I can give you an example. So they did a study where they gave, and these are the kinds of things that psychologists do, okay? And I know you can knock it and say, well, that's kind of dodgy or whatever. But this is what they do in psychology, okay? These are the kinds of things that we do. They gave people of cards, okay? And the people had to choose one card at a time from the deck. And each card had a win or a loss amount on it, right? and each deck had its own payout pattern. This is kind of like trading, right? Trading a system. So if you think about it, a trading system is like the deck, right? And each card that you pull out of that deck is like an individual trade that you had with that system. So two of the decks contain cards that gave large or frequent rewards, but consistently choosing cards from those two decks led to losses in the long run. In other words, they had either a lot of little tiny winners, but then they had too many losers that swallowed up the winnings, right? So that's kind of like a scalper who doesn't have a high enough win rate, right? And then the other one was it may be that the deck had a few really big winners, but it had so many medium and small size losers that you still were going to lose over the long run. And then the other two decks that they gave them, again, this is very relevant to trading. The other two decks that they gave them provided a small or medium size amount of cash per win when they pulled a winning card, and less losses over time throughout the deck. So they actually would make money over the long term when they played with that deck, right? So these patterns were kind of mixed up. So they really shuffled the decks really good. So it wasn't obvious what was happening with each of these decks. And what they found was the women would be more likely to focus on the losers and the things that had happened recently, whereas the men were much faster to realize, oh, okay, so this deck is doing this, so I don't want that deck. I want to play with this deck over here. And they would switch decks faster, whereas the women were more focused on the minutia and the little tiny patterns that were happening, the loss, win, like that. And the men were basically figuring out that, okay, this is a losing deck, even though it does give me big fat winners. There's way too many losers in here. I want to play with this deck. So that's kind of the idea here. And they're not saying that men are better than women at trading. What they're saying is that it depends. It depends on what's important. If the little details are important, then the women are more likely to nail it. If it's the big picture stuff, then maybe the men are more likely to nail it. So that's what that was all about. All right, so those are the three things, guys. The I was wrong, which is something that women are more likely to embrace. Though that's too risky, which is, again, what women might do when a man might say, it takes courage to be a pig. You got to be a pig. Woman might say, not so sure about that. And finally, the men focus on the big picture, and the women are more likely to gather more information, be in information gathering mode, and focus on the little details. So that's basically the three things that I wanted to cover. And what I'd like to do now is dive into the charts and take a look at what you're looking at. Now, what I wanted to, the reason why I have this chart up here, one of the traders in my group pointed out that this may end up being, we don't know now because it's a weekly chart and the weekly candle hasn't closed yet, but this may end up being what we would call a bend trade. And I'll show you what that looks like. Bend trade is when we use the line chart, which is basically the one moving average on the close, and see how this market here has bent and gone much lower like that. And if we close really bearish this week, that means this line will be sloped down strongly as it is now. And we'll get a really good opportunity to sell this market next week. Now, I usually don't take trades on Mondays or Fridays because I find that those are the worst days to take a daily or weekly chart trade. So I'll wait for this candle to close. And then if I can get some internet, which I believe I can when I'm on holiday, I will place my order in on a Tuesday after the Asian session. So let's say that this weekly candle closes right here at 99.25. And the low is the current low of the week, which is 98.94. I'll place my order about 6 or 7 pips below that, so probably around 98.87. Okay, 98.87. I'll put my stop loss up above the swing high, which would be above this one, which is at 104 even, right? 104.00. And then I would sell this sucker if it triggers sometime next week between Tuesday London session, so ignoring the Tuesday Asian session, all the way through till the end of Thursday candle, right? Thursday close of New York. Now, as far as let me see here. I want to see what the likely targets would be. I've got what I usually do here when I don't have a clear target is I go with the I go with the old fib extension, right? So we use this fib extension from this swing high to this swing low right here and see what that does for me. Anything? 161 is down here. 261's all the way down there. Yeah. I'll probably go round number. I'll go round number. If I'm selling at 98, 87, I might go then to 97 and then 96, 94, targets like that. That's probably what I'll do on that one. If it does, in fact, look good. We don't know what's going to happen. But the other one I want to take is a very similar kind of thing. This one is on silver. See how silver is also giving this really bearish looking candle. If it closes bearish like that, we'll have a bend trade on that one too. And I will sell below the lowest low here, which is probably going to be this candle right here. So 6 pips, or well, it's cents really. It would be, I'll sell around 14.33 is what I'd sell on that one. 4 cents below the low. And then, again, we got a 12.31 target right there. And then there's 10.45 and 902 as potential targets on that one. And that's probably it. I know I've been also watching the Singapore dollar, but I'm not so keen on this one anymore. I was going to take a buy on this one, but not convinced. I think I'm going to hold off on that one and stay on the sidelines for that one. So those are the charts that I've been watching. I would have liked to have sold the Aussie last night. I spoke to this. I was hoping that we'd bounce off this level right here where this arrow is. Didn't quite make it there. It did do a little wick into it, but I wanted it to really get up there and kind of push off of it, and it didn't. That's one that I was hoping for. Maybe, who knows? Maybe it'll eventually happen, but I don't know if I'll see it. But I would like to short the Aussie given the right opportunity. What about your charts? Are there any charts that you guys would like to see while we're here? I'm happy to go ahead and take a look. I'm going to take a drink of water as you type in your markets. Okay. Gold. Samir is on the gold train. Okay, so what happened with gold was I was pretty hot keen to see gold bounce off this, to see what this gray box is on my chart. And the reason why is because we had support over here, and I thought, oh, when it gets up here, it'll hit resistance. It actually went a little bit higher. It went to the next level that I had drawn on my chart. And just to point out, these lines were drawn before, these lines go way back, right? So it's hit this level. If we close below 1144, I think what may end up happening here is we might get a really bearish. Well, not so sure on the weekly. I was going to say weekly may not be bearish enough, actually, because it's probably going to be too small. Samir, this is a tough one. This is what I would do. If you want to sell this sucker, you could put an order to sell below today's low. Let's say that we get a nice bearish close, okay? It could sell below today's low, right? If it doesn't trigger, you might assume that you're going to see a double top next week. It's going to come back up here. And then once you get that double top and you get that bearish candle up here, then you sell off of that. And then you put your stop loss above whichever one is the higher high, whether this swing high or the one that happens next week. I wouldn't sell it on Friday because let's say we get a candle that closes like this, and then tomorrow it kind of goes up a little bit and never really trades lower than today's low. Then who knows what will happen Friday, but it probably means it's due for another attempt to come back up here. So there's two ways to trade this. Basically, if we get a good bearish candle today, you could sell tomorrow below the low of today. I wouldn't sell again during the Asian session. That's a bad time to get into trades. Instead, I'd wait for London open and then sell. The other thing is if it doesn't actually make a new low tomorrow during the daily candle, what we could do is just wait and see if it double tops. So that's what I'm thinking on that one. The other chart we have here is, oh, we have a few. Okay, cool. The euro. All right, Euro's a tricky one. It kind of looks like here. Let me zoom in. Kind of looks like there's a couple of different ways that you could there's a couple of different ways that you could play this. All right, number one, first of all, I had it in a big box, right, and we've come out of that box. So we're on the edge of the box. If we're gonna bounce, now's the time because it should bounce today, right? If it doesn't bounce, we're probably gonna break down below this bullish candle. And what that means is we're going to start to look pretty bearish on the old weekly. And that may set up a brilliant weekly trade if we get a bearish kangaroo tail this week. It's going to have to do some more selling to get down there, but this could be a pretty interesting looking bearish candle. In other words, this could be the high, the swing high that stands for like 6 months or something. You know what I mean? Like, if this prints as a swing high, this would be a very tempting trade for me because I would expect that it would not only get to this level, it would probably even break through this level because that would mean that this up move just failed. What looked like earlier in the week to be just a brilliant, bullish trend has completely collapsed. So my advice would be to sit on your hands and see how this weekly closes. If it closes as a kangaroo tail, then next week you can sell off that kangaroo tail, put the stop loss above the high, which is at 117.15, we'll call it, selling below the low, which will be around 113.60, and targeting at the very least 105.70 down here. So that's what I would say about that one. I think that could be, the trade of the, well, I was going to say the trade of the spring, but I know it's really autumn for a lot of you. We're going into autumn, so not spring. All right, let's keep going here. Pound. Pound is another one. Let's take a look at the pound. Pound for me is a little bit different to the euro. It's been in this big box of consolidation. It had a few false breakouts. And so I really don't know what to say about the pound until it breaks out of this box at 1.5483 or on the upside at 1.58. It really needs to go somewhere. And typically, if you follow my trades, you know that I like to see a confirmed breakout, which I call the last kiss because there's specific rules set up for the market to go out, trade up here, come back down, bounce off this, and then we go. So the entry is always on the kiss off the box, not on the breakout. You can see the problem with taking breakout trades is you'll see things like typically, and I know this is black. Oh, is it black? No, it's blue. Cool. I thought I had to change the color, but I don't. There it is. So you get a false breakout here, and that did not give us a last kiss, so that was a no trade. You have a breakout right here, and that did not give us a last kiss, so that's another, loser that or small winner that or break even that didn't turn into a trade. That's another false breakout that did not give a last kiss. Another one that did not give a last kiss. So the last kiss rules enable me to really just qualify these breakouts and only take the ones that are really looking good. So I love the last kiss trade. So that's what I would do on that one. Saeed has the same one, which is the pound. And Canadian dollars, Sayed says the US dollar Canadian dollar, which is right here. This one's interesting. Boy, it's kind of like the Aussie. I mean, the Canadian dollar is just in the toilet, isn't it? This is a tough one. Let me go to the other chart, actually. Let me see what's going on here. All right, here's your weekly. It's obviously in an uptrend, but the question is where do you get where is the opportunity to, where's the pullback? I think the pullback is going to be coming on the daily. It could be on the 4-hour, but the more likely is going to be this. Pull back to this box area and a bounce. So what we want to see, and I'll change the color because I know the black isn't very nice. It's hard to see the candles. So you want to see a pullback to this and a bounce. So a really strong bullish candle in this area would be a pretty good that would be a pretty good spot to go long. It may still go up next week and then the following week pull back or something. Who knows? But what you really want is you want the market to bounce off this established high and confirm that it still wants to go higher. So anything that's a bullish candle, when I say bullish candle, it might be something that looks like, for example, this candle right here. See this one? It might look like that. Or it might even just be like a little kangaroo tail like this one right here. That may be what it looks like. Or it could be just a big candle like this one that closes up near the high. This one. So that's the kind of thing that I'm talking about in terms of a bullish bounce off this level. That's what I would do on the loonie. All right, still moving along. I just want to make sure we're okay for time. So we have a few more minutes. The euro, we talked about the euro, Kenneth, the Kiwi, and Mr. C, can you tell me which chart you're talking about? Okay, we'll go to the Kiwi and we'll go to the Aussie. Okay, I think I talked about the Aussie. So the Aussie, I was hoping for a 72.55 pullback to sell off of that. I know that yesterday we did get one on the 4-hour this wick, but to me, it really needs to penetrate that area and really push off of it. This was just kind of a brush, which shows the weakness really in the market. That's why it didn't go much higher. So I would look for a pullback to 72.55 to sell off that. On the 4-hour, you might be able to get in on a 4-hour trade on that one. As far as the Kiwi, boy, this Kiwi chart is so fascinating because of the big the big move down. It's interesting to me that the Aussie has fallen almost to the bottom of the kangaroo tail, but the Kiwi has not. The Kiwi is actually almost back in the consolidation box that it was in for so long over here. So in other words, if we extend this consolidation box to the left, we're like right almost back in the box. So it's much stronger than the Aussie, and I would actually prefer to short the Aussie. So if I were saying, hey, which one am I going to risk money on? I think you're better off with the Aussie. I think this is showing a little bit more strength because it's so close to where it's been recently. Whereas if you compare that to the Aussie, we can put these side to side if you really want to see what I'm talking about. But I think most of us here are like, you can see what I'm talking about. But this is basically a much stronger looking chart, the Kiwi, than your Aussie is right here. And again, we'll put these side by side so you can see. Sometimes this is really instructive. Like, for example, when we trade the non-farm payroll, and we have our non-farm payroll webinar, we can see the difference. So look at this. Here's your box here in the Aussie, and we're clearly below that. We've made the lowest low, right? Okay, I mean, other than the kangaroo tail I'm talking about. And then this one, we actually, on the Kiwi, the lowest low was made right after that long-tailed candle. And the recent low we made is not lower. It's actually a little bit higher because the low here is lower. See, the wick is all the way down here. So you can see we're actually still sagging on the Aussie, but we're kind of holding firm on the Kiwi. So I would prefer to short the Aussie. If you're going to short something, you might as well short one that's looking, weaker compared to the other ones. And certainly the Canadian dollar has been looking pretty weak too. But yeah, the other one I should point out, and I know I didn't tonight, but the other one that's really interesting, guys, is the Euro Aussie. This is a fascinating chart. It's looking kind of like it's consolidating now, but boy, did it explode. It'd be really interesting to see how strong this candle closes. And the reason I say that is we might get a pullback to 55.50 and a bounce. Maybe that happens over the next 2 weeks. That could be a really good spot to buy. The other one would be around 51.70. That could be another spot to buy. Assuming that this, breakout here holds firm. So, any comment about the crazy move on Friday and Monday, Okita? No, I will say, Okita, that in our private forum, I mentioned on Saturday that over the weekend, I mentioned that the rumblings that I hear from the private fund traders are that there's a lot of expectation for volatility to the downside. In other words, equity markets on fire. And so I wasn't really surprised when that happened on Monday. I think that we are going into a high volatility period from now until October. I think between now and October, there are going to be many opportunities for swing traders in the currency markets. I think this is probably the best time of the year. And I think it's going to happen, like I say, in the next 6 weeks or so. I think this is really going to be the bread and butter time of the year. And I'm so bummed. I'm so bummed that I'm going on holiday, but I'll try and stick to my weekly charts. I'm only going on holiday for a week and a bit, so it doesn't really matter. But it is that kind of thing. I think the same thing happened to me. I was on holiday in Italy or something when the meltdown happened, with the GFC and all that. All this. It's just funny how it happens. But the point is, I think that I believe that, from the people I've spoken to, I believe that most clued in and connected traders at private funds are bracing for a real burnout in the equity markets. And I think that's obviously going to spill over into our markets. So I think if you're a swing trader, if you're a breakout trader, these are the places to be. Even if you're a trend follower and you've got a really weak pair against a really strong pair, these are the places to be. I think that the commodities are going to race, and I think that some of these currencies are really going to run. So I would anticipate not a reversion back to normal, but rather, sure, we might get little retracements here for the next week or two, but I would expect another explosion even stronger than what we've seen recently. In other words, if this Euro Aussie trend continues, remember what the Euro Aussie looked like back in 2007, 2008. I mean, go back and look at your charts. This thing was up there, right? So this thing can really move, and I would not be surprised if. See, maybe I should go weekly here. Yeah, this is what I'm talking about. Yeah, so I was over in Europe when it was all the way up here, which was awesome, working with Aussie dollars. But yeah, so I wouldn't be shocked to see some really strong moves in September. I think September is going to be the volatile month of the year. That's what I believe. I believe that to be true. So what we may be doing right now is just pulling back and then recoiling for another move. That's what I believe. Does that make sense, Akita? Hopefully that helps. It looks like, guys, we're right up against the clock here. Swing traders, where it's at. Okay, awesome, Akita. Thanks so much, guys, for spending time here. I appreciate it. Thanks to all of you watching the recording as well. I love that you're able to take time out of your day, spend with us. I really appreciate it. I hope you guys have a wonderful weekend, a wonderful trading week, and I hope to see you at another webinar. Thanks again, guys. Thank you very much. See you. Okay. Bye, Nicola. Bye, Akita. Bye, Pep. See you, Ray. Bye, Ray. Bye, Raymond. See ya, Alexander. Bye, Andy. See ya, Karel. See ya, Chris. Bye, Kenneth. Bye, Abdul. Bye, Abel. Take care, Diane. See you guys later, okay? Okay, bye.